you talked about how on the asset management side, you've got investing decisions that you have to make. So you have to decide what you want to buy, what you want to sell. You've got macroeconomic things that go into this. You've got security specific indicators that go into this. But it's my understanding that amongst the torch funds, they're actually very well defined and unique strategies that sort of do this in a different way. And so you've got to kind of do all of these. And so depending on which torch fund we're talking about, you got a very different objective. And so could you talk a little bit about what those varying objectives are?
Yeah, sure. So one of the most important criteria for the investment decisions that the students make is if that decision is consistent with their investment objectives. And we have sort of two different flavors currently running in the program. So we have 3 wealth management funds, and our wealth management funds, like any wealth management in real life and industry, are focused on providing the clients with what they decide they want us to do with the money. So traditionally, this is going to be wealth enhancement. It could also include maybe tax consultancy or estate planning or a number of other things. For our clients, what we're doing is we're targeting a risk profile, something like a 60-40 portfolio where 60% is invested in equities with 40% invested in bonds. How that plays out is this gives us sort of a suggested guideline in terms of what risk we should have in the portfolio. And the way we implement this approach is through sort of a top-down style, where we start out with what is the team's outlook for the macroeconomy? How does that turn into individual outlooks on different sectors within the economy? And based on how much we want to lean into a certain sector or lean away from a certain sector, because we think there's opportunities there, what are the best securities to get us the best risk return trade-off based on those views? So that's on the wealth management side. And then we also have a value investing portfolio that is U.S. long-only equities. So we're only purchasing stocks. And here, value investing means different things to different people, but at the end of the day, the idea is you are trying to buy securities at an attractive price. So you believe that the market has undervalued these companies, and you're looking to get in at an attractive price. And another sort of important aspect to that is there a sustainable competitive advantage that this firm holds in the marketplaces that they operate? Whether you rely on financial ratios to make those determinations or qualitative analysis of the actual business models, you'll hear a lot of different viewpoints from different folks in the industry, but the result is we end up with two pretty different investment objectives, where the wealth management side is sort of a top-down view, starting with the macroeconomy and getting down into how to get the best exposure on a security level. And the value investing is sort of a bottoms-up view of what are the stocks that are most undervalued that can offer a sustainable competitive advantage.
And so then the value investing funds, that could potentially look like a very specific mutual fund that someone would work for. And so I'm thinking about future career paths for students. And so if you want to get into money management, You could say work for a mutual fund company, and so then you're assigned to a fund with a very specific objective, and so the value funds in the torch would look like sort of a common setup in a mutual fund. Whereas, is it fair to say that the wealth management is more sort of on the lines of you're managing a client's entire portfolio to sort of gear it toward specific objectives? Is that one way to think about this?
Well, I mean, I do think that in practice and industry, wealth managers are typically going to take a much more holistic view of the entire wealth portfolio of their clients versus on the value investing side. I think you're right. It could look much more like a specific mutual fund or hedge fund where really it is just exclusively focused on growing the returns in the portfolio. But in the Torch program, I think what students come away with doesn't limit them along those career paths based on the objectives of their fund. In that, we've, aside from the fact that we've had students go on to successful corporate finance careers and banking careers, in addition to careers in investments, Torch is essentially a vehicle where we're trying to develop important skills that employers are looking for their undergraduates and MBA graduates. Sort of specifically, do they understand the expectations in business, and are they working hard and showing accountability and transparency and really understanding ownership? I think that's something that we hear employers are looking for all the time out of our grads here. Do they have critical thinking skills? Can they solve problems for themselves? Can they think constructively and skeptically about different information that they're hearing in the media or from colleagues and clients? And then there's just sort of the technical skills of, Wall Street runs on Excel. Most of the world at this point runs on Excel. So we get into a lot of work where folks are working in spreadsheets. They work a lot with Bloomberg, which is a skill set that's highly marketable when you get out on the other side. And I think that at the end of the day, whether you want to go into corporate finance or investments, if you want to be very analytically focused or very client-facing focused, stuff like accountability, critical thinking skills, and technical competency is always going to be valued, and hopefully will bring you the kind of success that you're looking for.
So when students go through Torch, what are some of the experiences that seem to really kind of surprise them? So the stuff that they really don't see coming, and then all of a sudden it's right in their lap.
So I think for most students, there's a fair amount of that goes on within the first meeting, where they sort of find out, I suddenly own $1 million worth of securities, and I got to figure this out real quick. I think the biggest benefit of managing real money over managing a paper portfolio is that you can talk to students about making decisions based on their emotions versus making decisions based on analysis and logic and reason. And we tell students that when you make emotional decisions, that has really detrimental effects on a portfolio. In a paper portfolio, that is really hard to experience for the students. When the market plummeted back in March, when the pandemic started, the students were visibly anxious. They were thinking about this stuff. The urge to hit that sell button on every holding that we had in the portfolio was a real emotion that they had to contend with. And I think that's sort of the the biggest differentiator between the learning experience here versus the learning experience um, with a paper portfolio. I think another thing that is really valuable that surprises students is, Torch is a lot of independent and teamwork. You're working independently to come up with your analysis, but then the team has to come together to debate and make decisions, as well as to develop performance reports and presentations for our donors and other stakeholders at the university. And so suddenly you're in a position to have to tell your teammate that the work they sent you wasn't good enough to put in and send to a donor. You have to say that in a way where you're able to keep working together. You're able to get the result that you need to get. And that's kind of the way it is in real life and in business. But is not as typically part of the experience that you might have in a group project in like a regular classroom. Um, so there's also a lot of development of these kind of soft skills of, how do you develop your team? How do you work together to sort of help everybody succeed? Because you can have brilliant ideas and make 2 or 3 great pitches for the portfolio. But we might hold 30 holdings. So, if you hit it out of the park on 6% of the portfolio, well, the other 94% of that portfolio is going to determine the outcomes even more so. How do you drive excellence out of your peers? I think that sort of stuff are some of the things that students find surprising.
Yeah. Well, I think certainly it's the case when different people are producing things that are of varying quality, to sort of call your teammate out and say, hey, this is substandard. That's conflict that has to be resolved. But I think in the situation that these students are in the Torch, even if everyone is doing their job exactly as they're supposed to, there's still going to be conflict when you've got a team of people who are jointly charged with making decisions. There is going to be a healthy amount of conflict, and so I would imagine that the students just learn a tremendous amount and sort of how to navigate those conversations and those relationships that have to continue to go on when you disagree.
Yeah, I think I'm a strong believer that courteous civil discourse and contention is definitely how we arrive at better decisions, not just sort of in Torch. I think that if the team is not really vigorously debating ideas and issues together, then we're not doing our job.
Yeah. Yeah. Well, Ryan, I think our time today is about up, but I certainly want to chat with you again. I think a lot of people would like to hear your insights on a number of things. But for now, thanks for your time. And I'm sure that some folks will watch this and want to get in contact with you, because I know Torch is a great thing. You're doing good work, and we appreciate you.
Yeah, thanks. This has been a lot of fun. If anyone listening wants to learn a little bit more, just Google Torch Funds UTK, and you'll see our website. And feel free to reach out to me if you have any questions or want to talk more about Torch. Thanks so much, Eric. This was fun.
Yep. All right. See ya.